Hello and welcome to the second episode of the Meet the Investor podcast. This is ARTEEN ZAHIRI and I am the host of this feature. Today we're speaking with Patrick Mathieson, partner at Toba Capital. Toba Capital is an early-stage investment firm committed to helping create incredible technology companies.
Let's see, I'm a partner at Toba Capital. I've been here for about 7.5 years, all in this job. So halfway decent amount of time in venture years. Toba Capital is a Southern California based, primarily software focused investing, a software focused venture capital firm, mostly focused on B2B software and solutions. We invest across multiple stages. It's what you call pre-seed on the very early end, and sometimes very late investments, more growthier pre-IPO rounds. But probably the most common stage where we get involved with companies is at the Series A, and that's often as lead investor. So as far as like the investments that I work with, that's kind of like the round and stage that I kind of personally thrive in. We invest between $70 and $100 million per year into mostly exclusively technology companies, but mostly software companies, although that's broadened over time. We have offices in Los Angeles and Newport Beach.
Awesome. Appreciate that rundown a lot. Patrick, a lot of kind of all our listeners are college students or, younger people that are recruiting, looking to get into finance and trying to figure out that path to venture capital. As somebody who I'd say maybe has a bit more of an unconventional path, can you talk about like your background and how you found your way into this VC space?
Yeah, so I always say there's two ways to get into VC. There's the front door and then there's the back door. So I definitely went in the back door, and what the back door means is basically being pointed in a particular direction and maybe happening to know at the right time the kind of person who is at a firm who is looking to fill a role, and you pop into mind as that person. The reason that's the back door is it's really out of your control, right? So when I basically my path was I went to University of Michigan for undergrad. I was a business major, kind of fascinated in all things. Business building, business administration, technology, yes, as part of that, but not like a hardcore technologist, just someone that the commerce was really fascinating. Organizations are interesting. The way you build them with people, that's kind of where my focus has always been. Got hooked up with a job at a startup out of college and worked at that company for a couple of years, basically learning enterprise software. So I was a business analyst, financial analyst, also a product manager for a mobile application that this kind of an enterprise IT company was building. Did that for a few years and had done a bunch of projects where I was supporting a bunch of executives. A number of them are at Flowcast right now, by the way, incidentally. Which is how we know each other. And so basically I had done a lot of work to learn that business. And then a person that I had worked with who was a mentor of mine was a partner at Toba Capital and was focusing on enterprise software investing. They wanted to hire an associate. And so I was fortunate enough to be one of the people that they thought of as a potential candidate for the role, and ended up working out really well. That's, I think a lot of people that want to get into startups and maybe venture capital is the farther away, aspiration or goal might benefit a lot from just pointing themselves towards startups. Or high growth technology companies in general. The closer you can get to that, you're in the ecosystem, you can do good work, you can attach yourself to a company people know, you can build a reputation for yourself. Then maybe the VC thing will happen for you 3 years in, or however many it was for me, early, or maybe 20 years in, but you're still kind of pointed towards the ecosystem. The fact that it was 3 or 4 years for me and not 20 is just kind of an accident of my personal history. I know a lot. Frankly, I know a lot less about how to go through the front door. I think going through the front door means you look like what VC firms are hiring in terms of your experience, and that can often mean on one route going in the finance route, like working at a bank or consulting or something like that, or alternatively, it can look like working at a very prominent startup, like a lot of the people that are up and comers in VC, did a couple of years at Stripe or did a couple of years at Dropbox or Facebook or something like that, and then they segued over. Really, that's the same advice as the back door, right? Which is just point yourself toward the high growth domain and hope that opportunities come your way.
No, that's amazing. Appreciate you sharing a little bit about your history there. No, really interesting thoughts. And then on the flip side of it, a good chunk of our audience are, entrepreneurs. They're starting a business, and they're trying to raise capital for, for growth and to fund their operations, or in some cases, thinking, do I need to fund, what stage do I need to fund at? Pre-product, pre-revenue. How much should I bootstrap? I'm curious what your thoughts are there, given, Toba Capital does a lot of early stage investing. There's, a lot of, people recommend bootstrap as much as you can. I'm kind of curious where you think is the right time to seek out investor fundraising.
I think that it's perhaps never too early to be having conversations with people that might fund you down the line. Some of our best conversations that we have on the Toba side are people that are just starting their companies or just thinking about starting their companies, and they'll say to us, "Hey, I want to sanity check. I want to sanity check this idea. I want to sanity check, like, this is fundable down the road, and I want to see if I can get you kind of excited by it, even, not even on a monetary basis right now, but just to have you looking over my shoulder, and potentially, being helpful, whether with money or not, in early stages, well in advance of an actual funding round. It's never too early to kind of start doing that. Obviously, you don't want to spend all your time doing that because then you're not building your company. But I think of company building, a lot of it is the art of pulling people into your orbit, and whether it's advisors or whether it's investors, and it's most definitely customers and employees. You're pulling people into your sphere, right? You're gathering their attention. You're finding like-minded people who want to support each other. And the best companies really, like, they may bootstrap for years, but they might have 3, 4, 5. It could be actual powerhouse investors who haven't even put a dollar in early, but are just their advisor to the company. Maybe they're a personal angel. If you spend a little time every week working on that, that compounds, right? And then eventually you just have this like army of people that are kind of with you on the journey. So that's how I would think about that. I think the actual question of, like, when do you raise, how far developed is the company when you actually put that funding round together, that's a continuum, right? The longer you wait, hopefully the better you're doing, the more valuable your company is. You perhaps get better terms on your fundraising, but then you have to wait longer to get external capital, right? So I think that question tends to be secondary to, have you found people that buy into the mission? If you're continually pulling people into your orbit who buy into the mission, then you will have capital waiting to follow you, especially in a market like right now.
Yeah, and the beauty of that is having the conversations early also allows you to like iterate on your idea at a very early stage. Like you mentioned, like giving a quick sanity check to somebody in the investor kind of community, and then networking from there, hearing their feedback. Even if you're not looking to take their money at that time, that feedback is crucial, and then you apply it when the time is right. You reconnect and go from there.
Right. And by the way, something that happens all the time is, so if you're, for example, sorry, I got to turn off notifications. If you're, for example, you're early on the path and you're running into VCs who basically say, "Hey, I'm a Series B VC, I'm a Series A VC. You're way early for me, but I'll take a meeting with you. I'll get to know you. Maybe I can support you in different ways in the shorter term." This has happened to me on the VC side. You go into that thinking, like, there's no way this is going to be in our sweet spot for years. And then you get to know this founder, and this has happened to me a couple of times, and you're just like, wow, this person is quite bright, quite compelling, and they're executing fabulously. Okay, maybe we'll break our rule. Maybe we're Series A investors, but maybe we'll actually participate in the seed round or put together the seed round for you. It's almost impossible to do that in the middle of a process. Like, if you go to a VC and you go to a Series B VC and you try to get them to do your seed round, and you say, "Hey, we're trying to close a round in 3 weeks," they'll never do that. But if you basically say, "Hey, we got 12 months to get to know each other," maybe they break all their rules because they're so captivated by you.
Yeah, it's a great story. Great story to share. No, really cool. And um, Patrick, one question I've wanted to ask you, because obviously we know each other. You're a board member at Flowcast, one of the portfolio companies of Toba Capital. I obviously work at Flowcast today, which is how we got connected. But putting that bias aside, I have to ask you, of all the companies, you've obviously invested in a lot of companies. You're on the board of multiple. Which is your favorite portfolio company?
There is no favorite, but what I can tell you right now is that Flowcast might be the company in the whole portfolio that's executing best right now, and is just like, quarter over quarter trumping the plan entering the year, the expectations for how we thought we would do. I mean, every quarter is a big beat. You're pulling better team members in. Every time I talk to Mike Whitmire, he's more and more relaxed, which is a change. And so they're all my favorite. But Flowcast is having a year right now for sure.
Yeah, and absolutely. Every time I ask like a VC investor, what's your favorite portfolio company, they say, oh, that's like asking someone like, who's your favorite like kid. But like working internally, I feel like there are some that are on a stronger path to success than others.
Or at least in a particular time, right? I mean, the
Yeah.
funny thing about companies, I always think, like, at least from the investor standpoint, when you're invested in multiple companies, you get this opportunity to sort of see their paths in parallel, right? And sometimes the ones that come out the gate fastest aren't the ones you finish the fastest. It reminds me a lot of if you go to like a baseball game, they do like the hot dog and like the bratwurst and the Polish sausage will like run around the field or whatever. And it's like the one, you never know who's going to pull ahead at the end. It's kind of like that in VC. I've been doing this for more than 7 years. Like the companies that exploded on the scene fastest, a lot of them burned out early. And then you have other companies like Flowcast, which maybe, wasn't like in year one, putting up record numbers, but just got better and better by the year and just compounded over time. And now is just flying. And that's a lot of fun. That's a lot of fun in this job.
Yeah, absolutely. And it's like a two-sided thing. Like you always hear the story of like, the investment that got away, like you were presented this opportunity to participate in a round and, you felt like it wasn't the right time. And then you kind of kicking yourself later because you see that, company propelling. You hear all these stories of, famous companies that like, went on Shark Tank, but didn't get the deal, but then ended up, growing substantially. And then I guess within that kind of context, has there ever been a company that you've come across that you guys kind of passed on for whatever reason that looking back you kind of regret and wish you participated?
So right when I was joining Toba, a really good friend of mine became either the first or second non-technical hire at Zoom. And he brought it, this was like, I think before they'd raised any money, and he brought it up to me. This wasn't the CEO bringing it up to me, but it was my friend, like, hey, should you talk to this guy? And I was brand new at Toba and basically couldn't tell a good company from a bad. And I knew we had a couple other, teleconference or web conference similar investments in the portfolio. And I think my response was like, it's just, too close. I don't know if it's interesting, blah, blah, blah. That would have been like a grand slam mega. I'd probably be retired by now.
I know. Oh my God. But you win some, you lose some, but that's a crazy missed opportunity. Yeah, I mean it's one of those things. I guess a follow-up question to be with that would be when you're looking at a company, and let's say like it's such early stage, especially you guys again like you're a Series A investor. I guess what kind of metrics do you look at to kind of identify if this is one that you guys are gonna fit your investment philosophy or not?
I think it really depends on stage, right? So like in that situation, I mean, this is what's tough is there's quantitative measures and there's qualitative, right? And so like, it takes a while to figure out what you're doing in VC. And even after many years, you might still kind of be behind the curve on what the right things are. So there's a whole plethora of things. I mean, if you're talking about a mid-stage SaaS company, I mean, there's a whole, Google any SaaS metrics worksheet, there's the growth rate, there's revenue growth persistence, there's net revenue retention, there's CAC payback, there's LTV to CAC. There's those things. All things are somewhat commoditized at this point. If you're talking really early stage, a lot of it is founder attributes, right? Is just basically, is this team portraying, and every team is different, but do they have some sort of edge that you can perceive and, hey, this company is going to overcome the odds and really build something pretty terrific here. Coming up against big incumbents and, without money and without attention. And, or this is the kind of team that can do that. And is it the kind of team that can execute? That's why I'm kind of a fan. We talked about this earlier, the approach of, if you can, and it's tough in this market, but if you can the entrepreneur meet the investor over a long period of time, and the investor observe the entrepreneur over a long period of time? Because one of the things that you do have the opportunity to do, if let's say you've known someone for 6+ months before you even have an opportunity to invest, is you see them execute over time, and you see them pivot over time, and you see them do all this early stage stuff, right? Which is like, I'm hunting for product market fit, didn't get it, ran into a wall. Well, okay, when that happens, what happens now, right? Do I, do the wheels come off, or do I dust myself off and then go a different way, right? If you see someone kind of being incredibly persistent and thoughtful, and then finally grasping and finding traction after 6, 12, 18 months, and you have the privilege of observing that as an investor, that's a huge indicator that you should back that founder. And it's also a big advantage over someone that's like just meeting them in the moment in the middle of a fundraise process with basically no opportunity to observe execution over time. I strayed a little bit from your original question, but I think when you're talking real early stage and you're talking team type bets, a lot of it, the heuristics don't help you much. You actually have to observe performance over time. That's tough.
Yeah, got it. Really, really interesting. Appreciate that. Kind of changing topics a little bit. Obviously, you and I are both based in the Los Angeles area, which is where Toba Capital, you guys have an office in Orange County and LA. Talk to me about if there's any kind of if there was any particular geographic reasoning for being in Southern California, and how you feel about the overall SoCal tech and startup space.
Yeah. So the fact that we're all down here is definitely has historical precedent. The founding team that started Toba came out of Quest Software, which is a company that was based in Orange County. Continues to be based in Orange County. It's changed hands a few times. But the executive leadership team and a bunch of key figures from that team were the ones who founded Toba, and many of them continue to operate today. So they're part of the SoCal ecosystem, especially the Orange County ecosystem. And so if you look at the early bets that we made at Toba, a lot of them were just, people that had come out of Quest and started companies, and a lot of those companies are in Southern California, right? I mean, I think that LA is distinct from Orange County, has been a more recent phenomenon. And I think part of the reason is that LA is kind of having its moment in the sectors in which we operate, which is B2B SaaS. And if you look at the companies that are coming out of Los Angeles, they're getting better and better. Flowcast being very much one of them. It's advantageous for us to be in the SoCal region already, having strong roots in Orange County and extending up into LA, kind of as LA is having this moment, and having key anchor investments. Again, Flowcast is another one of them in the middle of the ecosystem, kind of as it's thriving. So I moved down here 2 years ago with the expectation that I'd be able to find more great companies that fit this profile. For the most part, we've been pretty successful. I've been really pleased with the kind of stuff I've seen since moving down. Didn't have to move down to do those deals potentially, but I think it got a lot easier after coming down here. So to me, to be able to participate in building the ecosystem here is a great privilege. And there's a bunch of fabulous companies in the LA ecosystem. There's also a great kind of roster of early stage investors, angels, seed funds, Series A funds, et cetera, who we often partner with, or we often share deals with, or go in together, or just get to know each other socially. I think it's for kind of what I wanted to do at this point in my career. It's been awesome. So we're big bulls on it.
That's awesome. Yeah, no, great to hear. I shared similar sentiments when I was, I was originally from San Francisco Bay Area. So when I was looking at Los Angeles as a place to, lay my foundation, I saw, very similar trends. I guess more, just more macro trends. Obviously, COVID-19 unleashed a lot of new opportunities in tech, which is where you guys kind of focus from a sector. Now we're at an interesting point because, we were just chatting about how, there was the pandemic where everything was remote and everything was socially distanced. But now, thanks to the, introduction of the vaccines, we're starting to kind of normalize things, but it's not, completely the way things were before. It's kind of this new post-COVID phenomenon. With the way things are looking like they're going to pan out, at least in the near future, where it looks like, we're going to start doing some more social in-person kind of contact, but it's going to be regulated in a very different way. What are some new tech trends that you think are going to be really prevalent in the post-COVID era?
I'm not sure you're going to get much great macro thinking from me, honestly. I'm very much like a bottoms-up, company-oriented thinker. So I don't think you're going to hear anything from me that you can easily Google or get from somewhere else. I mean, what I can tell you is that from being on the boards of these companies and seeing kind of what happened the last 24 months, kind of after that immediate pause, right? There's a COVID pause, and everyone's trying to figure out what the heck was going on, and then you have a rocketing ahead of many companies. Flowcast is one of those companies. Another one that comes to mind is Boulevard, which is another LA business, which is a business management and payments processing platform for salons and spas. That was a company that its entire industry was, its entire clientele was shut down for 6 months of the pandemic, and they still tripled in client count last year. Why did that happen? Because many businesses that they serve use that opportunity as afforded by the pandemic to upgrade their infrastructure and modernize, right? So I think it's why you see all these SaaS companies. I mean, Toast is another great example of this. Toast had a great pause. They had a big layoff kind of as the entire restaurant sector shut down. Now, we're not out of COVID, but now 18 months into this, they're like, the greatest SaaS IPO, in recent memory, right? And so, I think a trend is there's kind of here's one trend, at least as far as B2B SaaS goes, there's a bifurcation of, do you serve a clientele that's using these opportunities to digitize and modernize and upgrade, or are you serving a clientele that's going to get eradicated, right? Because certainly a company like Boulevard, if they were in the low end portion of their market, like the very small, barbershops and whatnot that totally went out of business in COVID, they wouldn't be having the success they are. But they're on the side of the market, which is the luxury salon and spa segment, which is the one that had the opportunity to turn the crisis into opportunity, and to benefits for themselves, right? And so I think that's like what's kind of coming out of this as a big trend is just the winners became more winners and a lot of the losers went extinct, right? But if you're serving a clientele that's going to be robust to shocks like this, you're in really good shape.
Amazing. Appreciate those thoughts. And I guess coming up on time, one of the last kind of question I have here is when you guys are trying to invest in a company, what are you doing to make yourself attractive? Because there's so many different VC firms out there, so many different investment firms. There's a lot of competition, and when you're having these conversations with companies that you guys want to get into, are you guys kind of pointing towards IRR, some previous exits, successful case studies? Are you looking at being able to offer them specific sector industry expertise or partnerships? I guess my question is why Toba Capital from the startup's point of view?
Yeah, so whenever possible, we like to lead with relationship. And so I think if I'm in a dogfight where it's like, I'm fighting off 6 other firms and it's a company that I just met a week ago that has no basis to think, that I'm anything special. And I'm going up against people that have, 200,000 followers on Twitter. I'm potentially not in the right fight. You know what I mean? So I want to be in the opportunities where we can offer is sort of a relationship and trust built over time, and if possible via the kind of arrangement we talked about before, where we've gotten to know each other over a while, and can actually point to an ability to work together in a productive way over, if you sign up to work with a company, invest in them, you join the board, for example, you might be on the board for 7 to 9 years or something like that, or maybe even longer, right? So I always counsel entrepreneurs to think really carefully about what you're doing there. And so if we can make that work, it's awesome. I think another attribute of Toba that's pretty awesome is Toba has this evergreen fund structure, and the way that works is that basically, a typical fund will raise a bunch of capital and will have 10 years to deploy it, and then also to receive all the returns from it. That can sometimes cause distortions at companies because if, for example, you're a company that's 8 years in that journey, you haven't exited yet, you might be getting pressure from your VC to get, to sell that company. That's not always the case, and some VC firms are changing to adjust to that. But that is a frequent thing that comes up. Toba doesn't have that incentive. Toba's incentive is to be investing in compounders and be with them for a very, very long time. Again, back to Flowcast, we invested in Flowcast 8 years ago. If we had to get out of that investment in the next 2 years, we'd be making a colossal mistake. I mean, I'd like to own my Flowcast shares for 20 years, right? And so Toba's set up to do that. And so I think that that may sound like a small thing, but I think if you're a founder and you get to know us and you get to see the way that trickles down to how we operate and how we think, I think there's a lot of I don't know, VC game theory and like markup sort of based game theory and all this kind of stuff that happens at traditional funds, that if you don't play any of those games and all you're focused on is just long-term value creation, you probably get a more relaxed partner in us, and you get a partner that's perhaps not sort of pushing or encouraging you to do something that maybe you have to think about, like, kind of what's driving that pressure. So I think it makes us feel hopefully as aligned with the founders as possible. And I think what's good about this is that if you lead with relationship and you lead with, I'm gonna be this alignment in the situation with you as a founder, you actually can get into a situation where you are the preferred partner in deals, even where you don't know a whole lot about the space, where you're sort of like, but perhaps they can go with another venture capital firm that's really focused on a certain market and just has all this institutional knowledge about how, I'm making something up, but like the veterinary space works or something like that. You might actually pick Toba in that situation if you're like, hey, Toba knows less about this, but I'm going to get a partner who's easier to work with and is going to be, multi-stage capital who potentially can be investing in my company over the years, and just having this long-term alignment with me. I found that often founders like that a lot. It's not for everyone, but it sometimes is great. And I guess I'll say one third thing is that, at least in LA, I mean, whenever possible, we like to help with recruiting, and we don't outsource that to anyone. We really do that in-house, and a lot of that is just work by the individual partner at Toba, and we spend a lot of time placing executives at companies from our personal networks. When possible, it's a lot more powerful to do that when you have an ecosystem, right? So in Los Angeles, we've been very, very successful doing that. It's a little bit, the remote work is going to make that easier to happen in companies in different geos, but I think I think that is a superpower of ours in LA. And if you look at pretty much all of our LA companies, they're full of executives that we've helped recruit to those companies, and we're super, super proud of that.